Hey everybody, hey traders, welcome back. Happy Thursday, final hour, January 16th. Let's get started. I was trying to get something going 0DT style. It's going to be a lot of risk for a little bit of profit. So I passed on that. 2 for 2 on the day for daily profit play. 2 for 2 on double up alerts. Closed BAC out for 2 winners today, which is pretty nice. Took a very small loss on Amazon, which did mount a pretty successful comeback. It's currently trading at 221. This trade would be down around 60 cents. I lost 23 cents. So actually totally fine in that one. It was a 222.50 by 225 bull call spread and got in for a $1.34. Closed it out today for $1.11. Saw it trading as much as 140 to 145. Price is just not holding its highs. Now, there was a liquidity level today that I was watching right around that. It's very close to hitting it. So we had a high today on Amazon, 224.65, and my liquidity level was 225. So it looks like the market makers were able to defend the level, but we came pretty darn close to it, considering on Tuesday we were down to 215. So we mounted a pretty nice, $9 comeback on Amazon to end up with a very small manageable gain or loss rather, but it's totally fine. So good stuff there. But nice way to kind of end the trading for me for the week. SPX, we had 2 trades in this morning. Grabbed a nice little profit there. We got some good trades with price still pretty sideways. And that's what we kind of need. So we've got some other positions in. I'm looking to count how many trades. So 1, 2, 3, 4, 5, 6, 7. I have 7 open positions on my daily profit play. Just updating my tracker right now. Okay, get one more here. Yep, so I'm just getting everything updated with all the winners we've had the last 2 weeks. I'm not going to be trading live tomorrow. No live sessions for me tomorrow. We still have a trade on SPY, SPX, SPX, QQQ, XSP, SPX, XSP, all different expirations, SPX again. So yeah, those are going to be open. And price should be looking pretty favorable. Maybe another over the weekend. We got Monday's closed for Martin Luther King Day. Could be enough time left in those trades with some indecision that would be good for us. Waterfall income. I have 1, 2. Let's go 1, 2, 3, 4, 5, 6, 7. Excuse me, 7 positions open on waterfall income. So we'll let those marinate and ride out. Double ups all squared away. Actually, I want to take a look and see what do we have for earnings. Let's say tomorrow, stock twits. Let's go to earnings. Market react next week. I don't know. I think the market is doing this. I think this is where we are. So I don't think the market is going to do anything spectacular to the upside. I think we have to have more of an earnings consensus before the market gets overly bullish and optimistic. We clearly shifted from quite optimistic into a bit of a correction to head into the end of December. We had our Fed sell-off, which was December 18th. We rallied through the 26th of December, and then we faded back through the new year. And I just connect the highs, connect the lows. We're making lower highs and lower lows. Now, even if the market were to break higher, as long as we stay, so let's say we break to 600 on the SPY. All right, we get to 600. As long as we stay above like 593 or 594, then I think this market can have that little bit of extra momentum to the upside. I'd still be pretty cautious. I think there is a potential broadening pattern which can make trading pretty tricky. But I'm going to try to deploy some strategies that allow me to kind of stay out of the way and just take advantage of anything. I mean, the timing of this would be I'm making really good income trades when we have these down legs. So these down legs, I'm selling out a premium, selling out a premium. I'm trying to think in my portfolio, what do I have that are all like income trades? I have Amazon for an income trade. Chewy is something I'd like to roll. I'll take a look at that one. This is out to February 21st. Let me see. I looked at this one earlier today. Can I roll this for a credit? $30. We have earnings in April, March. April. So I can roll it up 250 to get, it's going to cost me 90 cents, or I can just keep it at 30 bucks, which is about an 18% chance it doesn't get called away. I think I might do this and keep the shares, make another couple $100. Let me see if I can get filled or buck on this. Actually, you know what? I don't mind if I just get it called away. I think I'm ready to get it called away and get the buying power back. I've had a nice profit on this one. I'm up 2,500 bucks, open position. So I'm just going to take profit. I'm ready to get the buying power back and go play elsewhere. So what else do we have for income plays? GLD, longer term. Okay. Bitcoin, longer term. Income plays, credit spreads. JetBlue, I've been holding that for a while. MARA expires tomorrow. This one's going to be a full loss at about $1. That's no big deal. I paid 70 cents. Actually, I might just close this for a partial 19 by 21. I paid 70 cents. How is this not in profit? Oh, never mind, because I'm upside down. All right, hang on a second. Let me go to MARA. I might. We're trading at 1845. I need this to get above around 1970. Let me see what I can close this for today. So my max loss would be about $140. I'm down 108. By tomorrow, if we're not above 1970, this is going to be a full loss. I think I'm just going to take the partial loss right here. So I can close for a 15-cent credit. That's not bad. So I got in for 69 cents. 0.69 minus 15. I get out for 54. So I get out for $108 loss, where my max loss would be 69 times 2, 138. I save about $30 risk. The likelihood of getting all the way to 1950 or 1970 tomorrow is probably pretty slim. So I'm going to take the small loss here. Let's see if I get out for 15 cents. 15 not filling, 14 mid price. Come on, don't be greedy. 14 got filled. All right, let me see if these are elsewhere. MARA, same thing. 14 cents, just taking small loss on this one. Here is MARA, 14 cents. 15 not filling, 14. Done. Okay, MARA, 14 cents. Small loss. Close. All right, this is a 16 mid. Let me see if I can get 15 now. 15 is filling now. Very nice. Save an extra penny. Okay. All right. A few more closes here, and then I will be moving on. MARA, not in this account. No worries. This one here, no worries. This one here. Got it. All right, let's get this one closed up. 15 cents. Okay, let me see if that is in my Pulver alerts for A1 Trading Discord. Let me check. There it is. I got it. So the 1750 by 16 was profit. Kept that one. And the 19 by 21. Okay, so that one closed out for full profit. The 17.50. So trade update, MARA 1750 by $16 credit spread. 95 cents credit. Entry, 0.05 debit. Exit, 90 cents net profit per contract. Okay, and then trade update, MARA. This was the 19 by 21 debit spread, 69 cent debit, 15-cent credit is my exit, and entry. So net loss is going to be 44 cents. Nope, 54 cents. 54-cent net loss per contract. Okay, that's been updated. What other income plays? We have Google income play looking pretty good. Up $500 on Google right now. Max profit still in the 60s and 70s. Got a little bit more to go. Intel. Let's see. Looks like I kind of messed up on Intel, huh? Kind of lost track of that one. Intel trading at 1977. This was a January 24th call that's trading for about 98%. Pulled it for 47 cents. Let me check my break even on INTC really quickly. Okay, so bought the shares, break even 22.20. Okay, 21.73 is my break even. Let me see what I can close this for. All right, I'm just going to roll this. So Intel. What do I have elsewhere on Intel? That's it. Okay, this just this account. That's easy. So this one. All right, so I'm going to roll this. My break even is 21.73. So bought the shares, covered call, added a covered call. Just reading through my notes here. That was 47 cents. Yep, break even's 21.73. Got it. All right, let me do a roll here. So this will be a quick roll. I'm going to roll this down. So 21.73. Let's roll this down. So I can roll this out when our earnings. Earnings January 30th. So I will roll this through earnings and down from 24.50 down to 22. I don't have to be super greedy here, but could I roll this out to the February expiration? That's not too bad. Roll it down to $21, get it called away for 22. Not the worst thing in the world. Or roll it up. Yeah, I'll get 50 cents. See if I can get 50 cents on this or 49 cents. That would give me 21. It'd be about $1.80 a share. All right, I'm going to try this one. 70 cents. 70 cents. Let's go 69 for the fill. Come on. 68 is bid. I got to get filled there. What? There we go. 68 got filled. Okay. Update the tracker. Added Feb 21. Expiration. And that's a $22 sell call for 68 cents credit. And the new break even would be 21.05. Okay, so I can get that called away for about $1 a share. Easy peasy. All right, what else? Income trades. Apple's an income trade. Amazon. That trade is all closed up. BCS Barclays got a bunch of puts in there. Up a decent amount of profit. These should be closing out. Ooh, this is nice. This would be some more profit for tomorrow. I'm just going to let them expire worthless. This is a decent chunk of profit. I have, let's see here, 255 and 255, 125 and 115. So about $700 or $800 there. And then a decent chunk of profit on these leaps. I just did a cash secured put out 364 days or 5 days, and it's up 12, 24, 36, 48, 6, 72, 84, 96, $10,800. Not bad. Not bad. Okay, that's good. I'm going to sit on those for a little bit. Baidu has some shares. It's collared. It's protected. Bitcoin, this one I just own the shares, collecting a nice fat dividend. I've got some cash secured put levels. This is a covered call at 30 with a long put at 15. This is out to March for some type of protective measure. It's a collar trade. Berkshire Hathaway responded nicely with the CPI news yesterday, as did a lot of things. BTI is British Tobacco. That's similar to my MO trade, which is just trying to get some. If I take ownership, fine, it's a dividend play. CB is an insurance play for Chubb Insurance. We bottomed out pretty fiercely, some similar to Progressive. A lot of it was on news this week. So Chewy, that's looking to get called away for February 21st. Chipotle. What's the IV on Chipotle? 63. Ooh, I'm going to take a look at this one. I think I looked at this yesterday. Chipotle. Could I take on some more shares around $48? Let me have a look here. CMG, Chipotle earnings on February 4th. Let's go out to the monthly. 55 by 50. I'd have to go like 60 by 55 by 50. Nope. Premiums are not fantastic. So 60 by 55. Let me see what happens on this. $1 debit on a ratio spread. Well, that's not what I want to trade. 60 by 60. Even that is a debit? You kidding me? That's weird. All right, I guess I'll just leave this one alone. The trade that I have running on Chipotle, I just sold a bunch of puts. 1, 2, 3, 4 puts for $275 of credit. And that is kind of it. These are out to March. That's it. The premiums otherwise aren't that great. Coinbase, I did a couple of 111 trades on that one. Costco did a 111 trade on that one. Cisco, these actually expire tomorrow. These will be profitable. Let me make a note here. So trades for winners this week. I have a winners and losers this week. So Amazon, I took a small loss. Winner on Cisco. And winners on BAC. And winners on SPX. SPY. We took a loss on SPY. Loss on QQQ with some weekly trades. I just took a small loss on MARA. Okay. What other expirations do I have for tomorrow? SPY. Those are hedges. Tesla. These are, what's my expiration here? The 265 put. This must be a DTE. Okay. So I have the ratio spread. That's going to be a winner on Tesla. Perfect. Winner on Tesla for ratio spread. That was a 230 by 225. Nice chunk of profit, about $400 per account. Not bad. Okay, so Tesla's got a nice little winner. MicroStrategy, have some shares. The ratio spread on MSTR, that's going to be a winner this week as well. So ratio SPY was a daily profit play. SPX daily profit play. BAC was double up. Cisco was portfolio. Amazon is double up. SPY, waterfall. Q's waterfall. MARA is portfolio. Okay. Looking good there. JD, I have puts that are going to be profitable. Okay, cash secured puts. They're the $20 put, $17.50 put, and $15 put, all coming for full profit. Not a ton of money on those, which is kind of depressing, but you know, they're better than a stick in the eye. Alibaba, credit spread should be in profit here. 70 by 65. Yep, that's going to be a profit. Surprising profit considering that stock has not had a bid to the upside. All right, and then we get into the longer dated AT&T. Some more cash secured puts. We're trading at 21.93. I have a 17 and 15. That's going to be portfolio profits. Okay. EETH. These are going to be in profit. Oh man, I've got a lot more winners than I thought this week. A lot of these trades are so far out of the money that they're just nicely profitable. Like EETH, that's a huge win. Make $6,100 by tomorrow's close, with a 99+% chance of profit here, 99.5% chance of profit. So I'm just gonna let it expire. That was a good trade. I did take a nice like 85 to 90% winner on the 60 by 40 credit spread on EETH. So that one worked out to be nice. I sold that during the big August sell-off. I did a wide credit spread on EETH, which is an Ethereum-based ETF. So that's going to work out just fine. I do have some partial shares of FXI. I have a cash secured put for $100 there, so FXI is going to be a little winner. Man, the publishers are going to love this when they're like, hey, who did what this week? And I'm like, here's 50 trades that I closed out for winners. FXY, looking better. Actually have some profit running on the old Japanese yen right now. Okay. So I bought shares, 58.62. I have a long put and I've got a covered call. But overall, I mean, I'm still down on the net position and I'm just going to hang out. So let's see if the old Japanese yen has a big story this year. Barclays, that's going to be some cash as well. BCS, looking good for profit. And then my 7, what did I do here? Did I sell against this at all? Let me see what this one looks like. I might end up, doing a diagonal spread. So I have a call. I must have sold something against it. Let me see what I have in my charts. BCS. Puts are going to be profitable. Okay, so I bought long call. So instead of putting on the cash secured puts for 5 and 10 contracts, I just added a long-term call. It's up a decent chunk of profit. Let me see what this is trading for. I paid $4.56 for it. That's not a bad trade. I think I might just close this out. We still have a lot of time left in the trade. BCS. I mean, this thing's looking pretty good. Can the bank go higher? I think I'm just going to take the profit. That way it's easier to manage. Long call, close each one out for a nice little return. I paid $4.56. They're trading for $7. Let me do the math on that. So if I close for 7, $4.56 was the payment. That's a 53.5% return over the course of what? The trade's been open for, really? I've had this trade open for 245 days. Man, it must have went really far out. I think I did like a two-year long call. So anyway, it's profitable. I think I'm just going to close it. I'll take the money and run. All right. So this one, so make sure this isn't a part of some of the trade. Cash secured puts, lots of them. Cash secured puts, everything is okay there. Yeah, just going to buy the call. So I bought the 7. Yeah, I'm in good shape. Plus I did a diagonal spread on this one. I'm just going to get rid of it. Or if I want to go for one more chunk, since it's 5 contracts, I will sell for this account right here. I'm going to sell against this call. Break even is 1150. And let's see if I can sneak in. So Barclays has earnings. Get another. This isn't bad. If I get it called away at $13, I would add another, let's see, $500 or $600 to this. So 1.15 plus or times 500, another $575 of profit. Price would have to get called away. The other one is by tomorrow. If I get it called away at 13 tomorrow, that's less premium than the current price. So I could go out a month and get $1 and change. Looks pretty promising. I can keep it around 14 and get 60. I mean, that's obviously more profit, but the price has continued to go up. We do have earnings in between there on February 18th. So I think I'm going to do this and sell against it. So for this account, I have the long call. I'm going to sell the 13 against it for Feb 21. That would lower me down to around $10.45. Get it called away at 13. Do the math. So 1150 minus $1.15. Get it called away at 13. I make $265 on 500 shares. It's $13.25. Could I wait 36 days or should I just take the profit? I'm just going to take the profit. I'm going to take the profit. Let me see if I can sneak in like a mid price here. 715 not filling, 710. Be generous. Be generous, Mr. Broker. 705 on the fill. Okay, not bad. Let me go back to BCS on that long call. That one's closed. This account right here, $7 long call up 1270. Close for 705. Oh, don't be a turd. $7. Okay, close for 705. Very nice. That's all closed up for profit. Okay, so closed for 705 credit. It's a nice little winner. $450 debit, close it out at 7, 250 times 500, 1250 profit. Not bad. Okay, what else? BCS, we're good. Baidu, have some shares, have some collars. Patience, BITO, I own. Berkshire Hathaway is good. Left off on Cisco, CVX, up a decent amount, just trading some energy. Ethereum, a winner. Some ETFs. This is Japan. This is Brazil. FCTC is a momentum trend. FXI is large cap China. I've got a little bit of shares. Have a secured put at 23.85 that will close out for profit today or tomorrow. FXI, I've got that one tracked already. GLD holding Google income. Intel repairing, IWM looking to get it called away in March at 225. JD still collared. Johnson & Johnson out to next year. Coca-Cola. Got some shares of Coca-Cola with the covered call at 65. My break even on Coca-Cola is 63.66. So I'm just going to hang out and see if that wants to get called away. Continue to repair it. I'll watch it. Eli Lilly, I did an income trade there, 700 by 690 by 600. That's up a decent little income chunk. More to come. It's going to be another winner. Nice. Eli Lilly is another winner for tomorrow. Cool, cool. LMT, that's Lockheed Martin. I put that on yesterday. MARA, close out a bunch of those for small losses. Philip Morris, own some shares, collecting some dividends. I might just continue to look to roll these out and just play the dividend game for a while. Microsoft, income trades. MicroStrategy, income trades and collar trades. I do have a ratio spread tracked for tomorrow's win. Micron, income trade. Netflix, income trade. Nike, NVIDIA, OXY out to February. This one's going to get called away hopefully for a couple of dollars profit by February. Pfizer just reestablished basically a campaign position. I bought the 20 call and I'm selling the 30. So it's a diagonal spread, and then I still have some shares. PGR is Progressive. That's an income trade. PHYS is gold. Palantir, income trades. PSP is private equity. It's a little exposure to private equity. QQQ, looking at some income opportunities. Hopefully in February we see a little uptick. Equal weighted QQQ. Let's see here. RSP is equal weighted S&P, Schwab, and growth. The Schwab dividend, Schwab growth, SkyWest. This one's out for a ways. I want to own the stock, but not at $110. So I did a ratio spread there. Actually, it was I think it was a ratio spread. Yep, ratio spreads in SkyWest. SLV, still own. Put in some covered calls. These should be totally fine. Yep, those should be fine. Almost done. Snapchat. I might end up taking some shares of Snapchat. We do have some earnings. Let me check Snapchat really quickly. Snapchat earnings at February 4th, and I have expirations on the 7th. So I have a 12, 11.50, 11, and 10.50 puts. It's not that expensive. I'd be willing to take on potentially 400 shares. Strong support around the 850 handle. I'm going to repair this for, with the size of the move. If it goes back above 1250, then it's pretty easy income. If it goes below 1050, I get assigned up to 400 shares, but I'll repair it. SPX, SPY, those are short term. AT&T, nice little win on some cash secured puts. TKO is a new trade from yesterday. Tilray, anything here? Nothing fancy. TLT, I'm long on bonds. It's currently up $500. It's 65 by 91. We're trading at 87. Okay, we'll see on that one. Tesla, lots of income trades. Uber, did a little ratio spread on Uber. UNG, up about $1,700 and hopefully more to go. This would be, I think UNG is in everyone's account. This should be around $7 credit. 7 times 100 times 11 would be about $7,700 on natural gas by April if we keep going higher. URA, that's uranium play. Not really much is going on. I own some shares of URA. I do have a long call leap at 20 and 22. I could look to sell against that right now. Actually, I probably should since I bought that. I did a 2-year play on this one, so I'm going to sell against this one. I'll add that for a trade next week. URA diagonal. And Walgreens has been making a pretty nice comeback. Still have a bit to climb here, but looking at some covered calls, some puts, covered calls, puts. It's a good dividend play. It's just been a crappy performing stock. Walmart owns some shares, put on a collar trade. XLC income trade for March, and XLE put in some cash secured puts this week, and XSP have some iron condors. All right, that is the portfolio right now. And as a total for the week, I'm showing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 winners this week. And 1, 2, 3, 4 losers. Okay. I've had better, I've had worse. Overall, I'll take it. 14 for 18. 78% win rate on the week. Some nice net profit. I'll take that considering the week hasn't really done anything too exciting. Here is what we're staring at. Do things get more exciting to the upside? Is this a bull trap in the making that's going to come back and gap fill CPI, possibly hit some fresh lows? I don't know. Monday, the market is closed, so we're going to find out if Tuesday everyone's antsy to do something directionally. So just hang out and see. Trump's officially president starting Monday. Maybe a small Trump bump. I don't know. I mean, I thought that's what this thing was. We had a Trump bump, and we're actually lower than the Trump bump. So I think now Trump bump was great. In the midst of a pretty bull market last year, the Trump bump, we had it. We had the market rip up here towards all-time highs into December, but it couldn't hang on to them. This was more of the reality check, right? Fed all of a sudden pivoted hard. They're not really going to be cutting rates in 2025, maybe once, maybe twice this year. From what I saw on the probability of the Fed watch tool, maybe a June and December rate cut, maybe. But the 10-year yield started to do the exact opposite. So you've got, the bond market rallying with yields. You've got the bond market lower. You've got the dollar getting stronger. Bitcoin is off the all-time highs. A lot of stocks have peaked out and hit their all-time highs. The index has hit their all-time highs. So this is kind of this is a wait and see. Are earnings going to be strong enough to justify higher highs? Are earnings going to disappoint in any capacity, whether it's Mag 7 disappointing or the broader market disappointing? So I think this is where we're at. It's like the market's got to prove it wants to be bullish. I think right now the easier trade would be, I wouldn't be surprised if the bears just catch the upper hand again and then drive prices a little bit lower. And we'll see, like percentage wise, like maybe there is a 10% correction. I'm totally fine with that. Right? Trueflation, did it go down that much? I mean, that'd be a pretty strong reading if it did. So 2.83, yeah, that's a pretty big drop. I'm not getting overly excited about it though, right? I mean, this was our recent high that we ran aggressively up towards it. That was our Fed rate decision. The bond yield's doing the exact opposite of what the Fed was doing. So Fed cut, bonds are ripping, and inflation's getting stickier and higher as we saw for 3 straight months. Going lower on inflation is encouraging, but we would have to have a lot more. And, would the Fed start dripping in language like, oh, inflation truly is transitory. We need more time. Things are stable, blah, blah, blah. Maybe, but this is a good tool to look and see if inflation is in fact going lower, then just keep an eye on it, All right. So that's something to watch for sure. What else? Let's go dollar. Dollar is hanging in here for a weekly candle. I think there's some pullback potential on like the 106 to 105.50 area. If you look left on the chart, I could see a lot of dollar resistance back here. That becomes support, something along this area. So if the dollar pulls back and catches a bid, dollar pulls back and catches a bid, I could see more dollar strength, but a pullback would be nice. If the dollar continues to run hot, I would say this is probably the most painful thing for the U.S. economy. Dollar gets stronger, that probably means that the 10-year yield will go up too. So if we have dollar strength, will also equal U.S. 10-year higher, which will also equal bonds lower, which will likely equal either pressure or pain for equities. Okay? Because right now, look, if your 10-year yield can get up to 5%, 5.5%, and people are taking on uh, basically, risk-free 10-year bonds, um, it's not a bad play, especially if there is pressure and pain ahead for equities. But the catalyst, I think, is going to be the dollar. Like if the dollar pulls back, okay, if the dollar goes down, yields go down, bonds go up, pain and pressure eases, right? So pain and pressure would be down, and equities could actually go up because of that. So we could have equities rally if we see the yields down and the dollar get a little bit softer. Okay. But I've already seen some forecasts where if the 10-year gets to 5% or gets to 5.5%, that would call for the dollar around 118 to 120, which is a long ways away. And man, that would be a very painful trade. So I would be really concerned if the market does something like that. So I don't know what type of manipulation we're going to see in the dollar this year. There could be lots of it. There could be none of it. But I am cautious and trading risk defined and trying not to do anything silly or get overexposed, because if something is breaking or something is, I don't know, flashy and choppy and nasty and super volatile, and we have like another volatility event like we did in 2024, if we have another one of these, right? If we have another one of these where it's just like a one day crazy move, extremely disruptive in the markets. Okay. Extremely disruptive. All right. Anyway, that's that. Oil, possibly, I don't know, maybe a bull flag. Maybe a bull flag. I thought we had a bull flag potential up here. If it goes sideways and we still go higher, again, that's sticky inflation. If oil comes right back down to the 200 moving average again, if it catches a bid, great. If it doesn't and we come back down below the 200, I just think that's a squeeze. I think this is an oil squeeze that ultimately fades back down, and we're still kind of range bound in oil, and we're not getting too much higher than 80 and no much lower than 67. So I don't know. I don't have any trades on oil. I'm just watching to see where the bigger play is going. Okay, natural gas. Ooh, this is looking pretty tasty. Natural gas, fresh highs in the day. This diagonal spread is looking pretty darn good. And if it gets above $23, I get this thing called away for like $7 a share. It's fine. I'll take the profit. I guess I could have. It was cheaper to do this than it was to buy the shares. If I bought the shares around $19 or $20, I'd be paying. I'm in how many shares? UNG. I think I'm in one contract for a lot of my accounts here. Yep. So nothing too big, but it's a $1,000 risk. It's like $1,100 risk for a $700 or $800 profit, which I would say return wise is pretty good. Gold also looking better, but I'm not super bullish on gold for adding more positions. I'm bullish on gold as far as getting a breakout above the highs, but I think that gold is still either range bound or we have like a little bit of a wedge. So high, low, maybe this keeps testing and then we go lower, or we see that it breaks the highs and gets up to the same high. And then we have a range trade. If it stops going up and we come back to the range, allows this 200 moving average to catch up. I still like gold. I've said this for months now, 2,500, 2,450, 2,400. I'd be looking to add more positions to gold. Does the dollar go down with inflation? With maybe. Look, the correlation I'm seeing right now is if the dollar is going to go down, we probably have to see the 10-year yield go down with it. That's been the most obvious correlation. We go to my bond part here. So the US 10-year, to actually see a couple days of follow through on the 10-year is kind of nice. If we start to see this 10-year going farther to the downside, I would look for the dollar to do the same thing. Because the dollar, if you remember, also had a bit of a bear trap. It was like a falling wedge, and it was a big squeeze. And the dollar pretty much ripped around the same time around the Fed rate decision in September. The dollar got stronger, and the US 10-year started to go up. And they've been mostly doing the exact same thing. So if the 10-year yield drops and or dollar drops, like those could be two very nice things to see in the market in order to give risk appetite a chance to sustain and see some dollars flowing elsewhere. back into equities as opposed to into cash and into holding and into non-invested positions. Mortgage rates, are you freaking kidding me? We're up to 7% now, you a-holes. Went from 6.93 to 7.04. Cool. So that's your 30-year mortgage now at 7%. Bunch of freaking BS, man. In September, we were down to 6.09. With another, I mean, it's just nuts. Like the Fed cuts right here, and the market does the exact opposite. What a crapshoot. Blech. Which is performing better, IWM versus Qs? I don't know. Bonds, we got a nice little rip on bonds. I tried to price in like a futures trade. I was looking at a 111. I was only, I don't know, the risk was so big to make like $200 on bonds. I'm just going to stay out of it. I'll just stick with my TLT diagonal spread. That's about it for right now. Or I'll wait and see if the bond market does in fact break in 2025, and I'll figure out how to trade it with some sell premium. Aussie futures, it's kind of like trading the dollar index. Euro futures, like trading the dollar index. Pound futures, same thing. Palladium, platinum, corn. Corn's up a decent amount. I'm not doing anything with it, but I don't mind it. If I said this earlier, I think I talked about it this week, maybe on Monday. If corn is going to be a head and shoulders pattern here, any pullback, I'd like to see, maybe a bull call spread and get some defined risk with options. So that might not be a bad trade. I'll start watching. I'll start watching old corn. Soybeans, nothing there. Maybe a bit of a range. I'll wait. Wheat, still not really doing much. Cocoa, I can't trade cocoa in Tasty Trade, or else I would. I was looking at some bear call spreads when we took out this high. That would worked out pretty nicely, but I don't have the instrument. FTGC it's a diversified commodity portfolio. I'm not in it, but I've been watching this one for a while to see are we actually getting a breakout. I'd love to see a trade like this. I'd love to see a pullback trade and just buy the lows and then take it up for a range trade. 2250 to 25 is a pretty decent return. If we are breaking higher on FTGC, then that's fine too. I can measure this low, measure this high, project a signature move to around $27.50 to $28. I'm not ready to buy high yet. I want to see if we can get a pullback to the lows first. DBC, similar, just not performing as well. Bonds are still relatively tight. Credit spreads are relatively tight. So AAA versus BBB, CCC, this isn't flashing any red flags or anything like that right now. China, I talked about earlier today. The stocks above the 50-day, we're now 30% of stocks above the 50-day on the S&P. We are 34.5% on the NASDAQ. Some stocks right here that I just mentioned, the portfolio, lots of sector stuff. Okay, let's get into currencies, and I'll let you go for the day. And I'm about to head out to the airport. So today was actually pretty chill, surprisingly so. So the market for the week was down on Monday and has spent Monday to Tuesday. So we had a nice little like Monday direction, Tuesday pullback, Wednesday rip on CPI news. We're sitting here. Now coming into next week, there's no trading on Monday. Okay, Tuesday, the market, are we eager to go higher, or is this going to be a gap fill? I don't know if Trump is going to bring optimism again to the market, or if it's like we need to see what earnings gives us. That might be the next big catalyst is, our big earnings prints from Mag 7s, and that's all lining up here in the next few weeks. So do you see a hedge on the SPY? I already did it. I hedged a 590 by 570 earlier this week. I paid $5 for $20 of profit. So the net would be a net $15 if I'm right, and I'm all the way right. Otherwise, if I turn $5 into $10, I'd still take the gain. If I turn 5 into 15, I'd love that trade. So it was actually pretty inexpensive. I bought the 590 and I sold the 570, and it cost me $5. So the reward to risk is pretty favorable. I did that all the way out to March. So this was a March 31st trade. I'm willing to sacrifice that $5 in full, but if we come back and have a gap fill, or we come back and try to sniff these lows out again, that should be enough to take a decent chunk of profit on that trade. Okay. All right. So next week, any major news? Let's go StockTwits earnings. What do we have lined up for next week? Next week, 9, 16, 14, 15, 11. So still pretty light on the earnings calendar. Let me see. Let's see. U.S. banks massaging the numbers. Somebody's warning about it all crashing down in 2025. Oil sanctions leaves room for Russia deal while squeezing Iran and Venezuela. Expected immigration, birth rate, population growth, tougher sanctions on Russian oil. We have recession fears in China. Fed Governor Waller sees potential for multiple interest rate cuts in 2025. I don't know if you should say that, bro. Trump's Treasury pick says heavier Russia sanctions coming. Small cap crypto rallies ahead of Trump inauguration. And then Hindenburg was a big activist and short seller, and it looks like they might be closing, shutting down. Okay, next week, any notables for earnings? Let's see if we go to Monday. KB Homes, possibly. That's going to be Monday after bell, so I might look at that for Monday's trade. Maybe that maybe has some volatility to it. Tuesday, more financials. What else? Nothing crazy on Tuesday. Wells Fargo, JP Morgan, Goldman Sachs, Taiwan Semiconductors, PNC, MS. That's never mind. Them are on the wrong week. Let's go to next week. Next week. Now we have some more earnings. So Monday's closed. Tuesday. There we go. Now we're getting some love. Netflix. Netflix has some volatility on Tuesday. Procter Gamble, Johnson & Johnson. All right, let's take a look on Tuesday. We have some financials sprinkled in there. 3M, more financials. This is for the 21st. Okay. So the 21st. Netflix is going to be after bell on Tuesday. Okay. So I might look at placing a trade on Tuesday then. All right. I'm going to write that down. So earnings. Tuesday after close is Netflix. A lot of financials still. Okay, still a lot of banks. So that's not a lot of volatility, but kind of the state of the market. Johnson & Johnson, that would be Wednesday. So Wednesday before the open is Johnson & Johnson. Halliburton, Procter & Gamble. More financials. Kinder Morgan, that's oil. That's been volatile. Alcoa, look at Alcoa. That's also Wednesday. Wednesday after bell. So after close, Alcoa. Right there. Fairly volatile. Okay. That's about it for Wednesday. Thursday, we got 55 reporting. Let's see. Alaska Air, some financials. If I'm missing any, if you see any that look interesting, just point them out, spot them out, throw them in the chat. Texas Instruments, no. A lot of these just depend on volatility and score. I mean, if I'm not going to get a lot of movement or the options chains aren't 50 cents to $1, I'm probably not taking a lot of these trades. So we're still kind of just getting started on earnings. It's kind of cool that Netflix is early in the mix to kind of shake things up and get some volatility going. Friday, again, a bunch of financials here. American Express. I'll look at this is Friday. Friday is going to be before the market open, AXP. Verizon, maybe that one as well. So that would be Friday before open, VZ. and maybe NEE. Okay. So next week, Tuesday, Netflix, Wednesday, Johnson & Johnson, Wednesday, Alcoa, Friday, American Express, Verizon, and NextEra Energy. Couple of things to look at for next week's trading. Yep, no trades on Monday. Martin Luther King Day, markets are closed. So Monday, I'll still hold my session. We just had closing bell. I'll still hold my sessions on Monday, all of them. We'll talk markets, talk shop, evaluate the trades we're in, any type of adjustments, maybe looking for Tuesday trades. So we'll go from there. Okay. I am off tomorrow, heading out of town tonight, driving tomorrow, so I'm not at the computer. No trading for me. That's why I was managing trades today. That's why I tallied up the 14 winners and 1 loser, or 14 winners, 4 losers. I'll get that noted as I'm going to be out tomorrow. And yeah, thanks for being here today. Hope you all had a good week. Overall, just another little income week. I mean, the market is doing its thing. It's just not really that exciting. I think it feels like it's on kind of the brink of something, you know? I mean, I wouldn't be surprised if we get some volatility that kind of gets sucked out of the markets. But if we have volatility increases if the market falls, and if we have a correction that plays out like very organized, then we watch it. The concern for me is that we have a bull trap or resistance, and all of a sudden we have a gap fill that has a lot of this momentum to the downside. We take out the election lows. We come back in and find, just depending on how volatile it is, I don't think it's a bad spot to be positioning for this area, but we've got to have a pretty fierce bounce. I mean, I for one to get back to these highs would love to time the market where we have a 11 to 12% upside. So that would be, let me change this to the measurement tool. I mean, if we get back to all-time highs, that's a 12% move in the index. The problem is it's going to be down for the year. So in order for this year to claw back to, 5% gain, 8% gain, which is the historical average, 10+% gain, I mean, either this stays like very contained, we go down 5%, we go up 10+%, 15%, and finish positive for the year, or we have a deeper flush, and then there's more of a reversal pattern, and then there's just momentum on the other side of that trade. I'm not sure. But a lot of this is based on the structure that I see, the 200 moving average. I'm being pretty patient. I'm generating some trades with income. I'm looking for some trades that give me some profit traps. So if the market falls, I have a profit trap, and then I have shares that I'm willing to own, ratio spreads or cash secured puts, where this pays double or triple because that's my profit trap, and then this is my cash secured put. If I get assignment, probability assignment here is usually like 10 to 15% or less. So it's rare that I get assigned, but if I do, I can repair the trade and hopefully flip it for a couple $1,000s on each transaction. So that right now is probably my favorite strategy, just because I give myself plenty of protection to the downside. I can juice the gain with the profit trap. I can, double or triple the profit there. And if I took ownership, it'd be of a stock that I'd be willing to own anyway at a price that I'd be wanting to own it. So get it on sale, have the cash to cover it, repair the trade for a couple $1,000s. If you get a profit trap, awesome. So that's what I'm watching, and I'll continue to do that until I feel like I've got a better feel and better sense of where the market is wanting to go. I would not be surprised if the market is going to still go sideways, where the market ends up, channeling lower. I just think the one thing that would be bothersome would be if we fall aggressively. Nobody's going to enjoy that. Even hedges and stuff are fine, but it's like that's why I have collar trades. That's why I have a bunch of protective levels, because I don't want to be stuck on the wrong side of like a giant fall. That's going to be pretty messy. All right. If you're out there watching this live, before you go, kindly hit the thumbs up button for me. Like the video if you're watching this recording after the fact. If you'd like to join my Discord or Telegram, it is free. I post stuff in here every single day. So here is my general Telegram channel. If you would like to join, many of you have already joined, but if you're watching live or catching me for the first time, there is my Chris Pulver Telegram. There's the link, and my Discord channel, same thing. So let's go invite people, edit the link. Chris Pulver, Discord. Okay. So Discord's in, Telegram's in. Happy Thursday. I'm off tomorrow. No live sessions, no daily profit play. It's been a good week overall. Monday is closed for Martin Luther King Day, Inauguration Day. Let's see if the market gets all antsy on Tuesday. We have Netflix earnings on Tuesday. A couple of the stocks I'd like to take a look at. And have a good weekend, everybody. Yep, Sarah, thank you for that. So in my Telegram channel, yes, if I have new people added in, yes, I don't send friend requests. I don't send direct messages. If you initiate one with me through the free group chat, that is me. That is me live every day. I'm obviously not going to solicit for anything. I'm not going to solicit for freaking, crypto this or try to start some stupid conversation that just all of a sudden turns into some angle thing. So yeah, be careful and report that type of suspicious activity. Also, they typically put in like a period or they misspell my name, and it's a pretty dead giveaway that it's not me. So just be careful on that crap. All right. Thank you. Thank you. Cool. All right. Thanks, everybody. Talk to y'all soon. Thanks. Bye.